Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Airplane travel is nature's way of making you look like your passport photo. Did you ever notice that the first piece of luggage on the carousel never belongs to anyone? Boy, those French, they have a different word for everything. Steve Martin, black holes are where God divided by zero. Stephen Wright, education is learning what you didn't even know you didn't know.
Europe's trade map is telling two very different stories. The EU now enjoys a 142 billion euro trade surplus with the US, but runs a massive 376 billion euro deficit with China. That's a swing of over $500 billion between its two biggest trading partners. The message is clear. America is Europe's customer, while China is its factory. Europe sells high-value goods across the Atlantic, but still relies heavily on Chinese manufacturing. That imbalance is becoming more important as tariffs, geopolitics, and supply chain security move from boardrooms to government policy. Forget stock markets, these countries are sitting on the world's biggest treasure chest. Russia tops the list with an estimated $75 trillion in natural resources, followed by the US at $45 trillion, Saudi Arabia at $34 trillion, and Canada at $33 trillion. The rankings span everything from oil and natural gas to rare earths, copper, gold, and timber. But here's the catch. Resource wealth doesn't automatically create economic wealth. Institutions, technology, and governance determine whether underground riches become prosperity or just headlines. After all, a mine only creates value when someone knows for sure how to use what's inside. El Niño is making headlines again, but don't assume higher inflation is guaranteed. India's farm sector is far more resilient today, with irrigation covering 55% of cropped land, up from 40% a decade ago. History also tells an important story. In 2002, a severe monsoon deficit led to just 1.2% food inflation, while 2009 saw 18.8% despite similar rainfall. Weather matters, but it's only one piece of the puzzle. Food prices also depend on inventories, policy decisions, global commodity prices, and supply chains. So yes, watch the monsoon, but don't mistake every cloud for an inflation storm. India's investments into the GCC surged 51% to $1.9 billion during March-May 2026, the UAE attracting $1.56 billion. But here's the interesting part. Only 17% of those UAE commitments were equity, while 57% came as guarantees and 26% as loans. That suggests Indian companies aren't making all-in bets just yet. They're expanding into the Gulf but keeping financial flexibility. It's a reminder that headline investment numbers don't always tell the full story. How the money is structured matters just as much as how much is invested. The Nifty 50 delivered a modest 3-year CAGR growth of 7.7%, but beneath the surface, the story was anything but average. While several heavyweight names posted negative returns, stocks like Trent, SBI, Bharti Airtel, Eicher Motors, and Shriram Finance generated 20 to 30% plus annualized returns. Others quietly compounded in the 10 to 20% range. The index may have looked sleepy, but the stock selection certainly wasn't. That's the beauty of markets. An index tells you what happened, but individual stocks tell you where the money was made. Sometimes the headline barely moves, while the real action is hiding underneath. India's mutual fund industry has grown into an 83.1 lakh crore powerhouse, and a handful of players manage a big slice of it. SBI Mutual Fund leads with a 12.57 lakh crores in assets, followed by ICICI Prudential at 11.15 lakh crores and HDFC Mutual Fund at 9.35 lakh crores. Together, the top three oversee nearly 40% of the industry's assets. The bigger story, Indian households are steadily shifting from saving to investing. Every monthly SIP and lump sum investment is quietly turning mutual funds into one of the biggest powerful forces in India's capital markets.